we've just seen the highest GDP growth since 2014, record corporate profits being reported, and the lowest unemployment rate we've seen in years. But could one piece of news from the Federal Reserve crash the party? Tune into the rest of our video as we try to make heads or tails of the market news from last week.
Last week, we saw the two leading U.S. indexes, the NASDAQ and the Russell 2000, actually flip red, with the NASDAQ down a little bit over 1% and the Russell 2000 down almost 2%. Meanwhile, the two lagging U.S. indexes, the S&P 500 and the Dow Jones, were both positive this week, with the Dow Jones leading up over 1.5%. Also, foreign stocks and emerging market stocks had a very solid week, with emerging markets up over 2%. Actually, the foreign markets flipped green for the year, and now they're up about 0.5%. I asked a question a few weeks ago. With the NASDAQ and the Russell 2000 breaking out to all-time highs, will the other U.S. indexes play catch-up? The chart that we're looking at today is of the S&P 500, and there are a couple levels that we're looking at on the S&P 500. If you look to the right of the chart, since about the beginning of July, the S&P 500 has been a pretty strong performer. The level that we're at right now on the S&P 500, if you look the whole way to the right, is at about 2818. Also, the top blue line on the chart is the all-time high earlier this year on the S&P 500 of 2875, which is approximately 2% away from where we are today. This is a level that we're watching moving forward, and if the S&P 500 breaks up above that 2875 level, which is the all-time high, that could potentially be a very bullish sign for the stock market for the rest of the year.
Last week, we've seen second quarter GDP numbers being reported, and they did not disappoint, coming in at 4.1%, which is the highest quarter that we've seen since 2014. Also last week, we've seen trade tensions ease as President Trump met with the European Union President Juncker, and they discussed the trade war and agreed on a ceasefire. They also began negotiations on eliminating tariffs on many other goods. Lastly, Jerome Powell responded directly to President Trump, insisting that they're going to continue with the rate hikes as planned and possibly accelerate them going forward. We've talked all year about how we're concerned with interest rates, and this week may be the most important week out of the entire year. We have most of the major central banks reporting their interest rate decisions and also giving guidance for the rest of the year.
Also, 265 of the 500 S&P 500 companies have reported their earnings so far for the second quarter, and 82% of those companies have beaten their expectations so far. So we're paying close attention to how worldwide interest rates and the rest of this earnings season affects the markets in the coming weeks.
Thank you for watching. We strive to give you everything that you need to know about the markets in 5 minutes or less.
Thanks for watching. Like our Facebook page and share our Facebook video. Thank you.